Guys, welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta, and we're here to give you an update on the yellow metal.
Yeah, both of us.
So let's talk the precious metals first. Gold, for the first time in a long time, is below 50,000 rupees per 10 grams in India. Great news, I'm sure, for a lot of buyers. Why is this happening, and is this going to be the case now, at least in the foreseeable future?
Well, it does look like, but let me come to the buyers in India first of all. And I was talking to some jewelers, Karunya, and they said people who wanted to buy it later in August or September for the weddings
Wedding
want
season.
to buy it right now. They've been calling jewelers and paying 50% upfront. That below 50,000 rupees is a great time to buy. It could go even further down. But remember, people have seen 56,000 plus of all-time highs. We started this year around 54,000 as well. So below 50,000 is a level that a lot of Indians do like. And yes, there's a lot of physical buying, investment buying, as well as jewelry buying happening in the Indian jewelry stores right now. But as far as the prices go, well, yes, it does look weak, and that is absolutely expected ahead of two very aggressive rate hikes that the markets are preparing for. One comes in today from European Central Bank. 25 basis points is what they were talking about, an interest rate hike that is coming after 11 long years. And that too now has changed to 50 basis points.
Yeah.
So that is something that the gold and silver bulls do not like. And then you have the US Fed meeting coming in the next week as well. So next 7-8 days are going to be really jittery for gold prices. If anything, could be a good time to start buying though.
When was the last time gold was sub 50K?
Last year, beginning of last year.
So since then, it has maintained that
Above
trajectory.
50.
So do experts believe that it could go further down, like you were mentioning?
So, we're trading at a very critical levels here. We've seen a low of 1687. So, if 1680 breaks, then the expectation is that, yes, we could be going to 1650, even 1630, those kind of levels. But yes, it would be a bounce back from those levels there. The gold prices, importantly, interestingly, is that you have seen very sharp decline in the dollar terms, which we keep talking about all the time. But look at the kind of depreciation that we've seen in other currencies. So if gold has declined by 7% in this year in dollar terms, it's down by 3.5% in rupee terms. It's down by just 2% in euro terms. When you look at Japanese yen, a currency which has declined to a 27-year lows, so the gold has done better in other currencies vis-a-vis US dollar, and that seems to have led to buying in other countries in their own currencies.
So is there a similar trend in silver as well?
It sure is. In dollar terms, silver has declined by 21% in this year, but it's down just about 12% in the Indian rupees. And it's a similar case scenario that you have seen in other currencies as well. Interestingly, in the Indian markets, we've seen nearly 700 tons of silver import for the month of May. June was 500 tons. The expectation is that July could be looking at good volume as well. At 55,000 rupees per kg of silver, there are a lot of people who just want to buy it like that on cash. We've seen nearly 80,000 rupees on that one. So 55 is a level that people find really mouth-watering.
It is. I mean, it's happening after so long.
You're a silver fan.
I am, and I want to use this opportunity to lap up some more jewelry. But aside from precious metals, if we talk about base metals, there have been moments of spurts, but again, they're all getting sold. Why is that the case?
So right now, everything is about macro selling. We have seen volumes continue to decline as well. I was reading a CFTC report which tells you that the crude volumes are the lowest since September 2020. Metal volumes are the lowest since November, December 2021. So with the kind of volatility that you have seen, the people really are waiting on sidelines right now ahead of two most important events. One is today and then the US Fed meeting. But yes, when you look at the demand and the point, what these higher rates could do to recession and to demand is something that not many investors like, and is the reason you're looking at that decline. I mean, as you mentioned, every uptick is getting sold into. We did see 4 to 5% of gains in last two trading sessions, but that's not holding today.
So still an avoid for metals, right? Trading with metals, because even when we talk to analysts, equity analysts, or we talk to technical experts also, I think all of them have told to avoid metal investing or trading at this point in time. Of course, I'm talking about the equity angle. But if it comes to trading with the metal, is the view the same?
It is, when you look at the US corporate earnings as well, so the FMCG companies have done well. But last night I was looking at the mining companies and metal producing companies, and their earnings clearly, or their profits clearly have gone down. The last quarter has been a savage one for most of these metals. So whether it's a BHP or other mining companies, they have seen their profits decline. So is it coming back again? Their guidance or their expert commentary also does not believe that this quarter could be a difficult one, a tricky one, because we are looking at more rate hikes right now. We've seen nearly 17 rate hikes already happen in the month of July. It was 60 rate hikes that we saw happen in the month between April to June as well. So until this is on, the pressure could just about continue. We also have seen inventories increasing. Copper inventories in the first half of this year have turned into surplus. Aluminum inventories have seen a gain of 2% year-on-year basis. So we are looking at inventories as well jacking up.
But it's not all bad news, because if metal prices continue to be weak, it's great news for consumer companies and perhaps investors who have lost money or who are still thinking of what to do. Instead of metals, they can look at investing in some of these consumer companies, because for them the costs will come off. Of course, Q1 going to be a difficult quarter, even for the consuming companies as well, given the spot and raw material prices. But I think, yeah, that's pretty much it we have in terms of updates on metal prices, base metals as well as precious. You take your call, you take your pick where you want to park your money. But that's all we have for today. Thank you for tuning in. We'll be back again on Monday tomorrow rather. I thought it's Friday. We'll be back tomorrow with a fresh update.